Built by profits, burned by profits.
At its peak, it was worth more than Apple, Amazon, and Google combined. Yet today, it doesn't even exist.
Its downfall is a warning for every empire consumed by greed.
This is the story of East India Company, a saga of conquest, corruption, and revolt. But first, how did a group of merchants rise from the London docks to ruling half the world?
The docks are chaotic, ships creak under the weight of cargo, men shout over the wind, and the stench of salt and sweat hangs thick in the air. Among the crowd, a group of merchants huddled together. Yet at this moment, they are plotting something so audacious it will change the fate of nations. Why? Because the price on the horizon isn't gold or land or power in the parliament. It's something stranger, more intoxicating. Spices. Black pepper, cinnamon, cloves, goods so rare in England that fortunes couldn't be made from a single shipload. But there was a problem. Sailing halfway across the world wasn't just risky, it was practically a death sentence. Storms, pirates, and disease had already swallowed countless men whole. For most, the gamble simply wasn't worth it. And yet, these merchants weren't deterred. They weren't looking to play the same game as everyone else. They were looking to rig it. What did they know that others didn't? How could a handful of traders, men with no armies, no crowns, no royal blood, even imagine rewriting the balance of global power? The answer wasn't in the ships they built or the muskets they carried. It was in an idea, something so radical it would let them share risk, pool money, and multiply their reach far beyond what any one of them could do alone. An idea that would transform this small, fragile venture into the most powerful corporation in history. But before they could conquer nations or bankrupt kings or spark revolts across continents, they had to convince England itself to believe in them. The merchants had cracked the code. Instead of fighting each other for scraps, they pooled their money, took on shared risk, and secured one weapon more powerful than gunpowder: a monopoly charter granted by Queen Elizabeth I. It gave them the exclusive rights to trade in the East Indies. No other Englishman could legally compete, which meant every ship, every spice, every ounce of profit flowed through one company. In modern terms, this wasn't capitalism as we know it. It was capitalism with royal armor. The crown reduced the risks, and in return, it got a share of the profits. It turned merchants into monopolists, and monopolists into empire builders. The East India Company wasn't just a trader anymore. It was the world's first mega corporation. Pooling capital meant bigger ships, more voyages, and economies of scale no rival could match. But spices and silk weren't enough. To protect their profits, the company raised private armies. To protect their armies, they built forts. And to protect their forts, they struck deals with kings that toppled those who refused. Trade became conquest, conquest became dominion, and suddenly, a handful of London merchants were ruling millions aboard. The East India Company had built something monstrous. The bigger it grew, the less it looked like a company, and the more it started to behaving like a state, which raises the real question. What happens when a company stops answering to markets and starts answering to its own hunger? The year was 1720, and London was gripped by a fever. Not the plague this time, but something far more intoxicating: profits. The East India Company's share weren't just climbing, they were exploding. From merchants to blacksmiths, even widows and servants, everyone wanted in. Owning a piece of the company wasn't just an investment, it was buying a ticket to empire itself. And why wouldn't they? Dividends poured in, tea, silk, and spices flowed back. Newspapers glorified the company as the golden engine of Britain's future. Brokers promised fortunes overnight. Coffee houses buzzed with rumors of ships bringing treasures beyond imagination. It looked unstoppable. But beneath the euphoria, the numbers told a darker story. Shares weren't rising because profit kept pace. They were rising because belief did. Because the market had decided that the company could never fail. It was too big, too powerful, too entrenched in Britain's politics to ever collapse. Families sold home to buy stock. Ministers whispered that Britain's very economy depended on the company's survival. Politicians themselves sat on its board. The company wasn't just trading goods anymore. It was trading confidence. In today's language, this was a classic asset bubble. Prices rose not because fundamentals improved, but because people believed tomorrow's buyer would pay more. It was speculation stacked on speculation, a Ponzi scheme with empire as collateral. But beneath the dazzling profits, the company was rotting from the inside out. Every conquest looked like growth on a balance sheet. But in reality, it was an unsustainable feedback loop. Wars funded by debt, debts repaid by squeezing colonies, and colonies revolting because of the squeezing. Corruption wasn't an accident, it was the business model. Bribes, insider trading, and monopolies created short-term gains but hollowed the system. What looked like efficiency was actually economic rot disguised as profits. The company's incentives were rigged. Success meant taking more, cutting deeper, and burning through resources faster. It was profit that cannibalized itself, the kind of growth that creates fragility, not strength. By the late 1700s, the cracks became impossible to ignore. Revolt weren't just rebellions, they were the market's brutal correction to a business that had been cooking its own book. But how long can a system survive when profit today means destruction tomorrow? Bengal, once the company's crown jewel, was stripped bare because of the famine. Grains exports soared, warehouses overflowed, but the fields themselves lay empty. By 1770, millions starved, not because there wasn't food, but because profit came first. Prices rose, bribes flowed, and relief was considered an unprofitable expense. The very structure of the company created what modern economists called externalities. Hidden costs dumped on the society so shareholders never had to pay for them. Famine meant higher short-term revenues. For Bengal, it meant corpses on the roadside. Famines decimated labor forces, rebellions bled armies dry, and the coffers emptied faster than they could be refilled. Suddenly, the richest company in history couldn't even balance its own books. And here comes the twist worthy of Wall Street. The British Crown stepped in, not out of mercy, but out of necessity. Shareholders demanded protection. Politicians feared the collapse of a system that financed their empire. So London did what governments always do when the too big to fail elite stumble. They bailed it out. Loans, guarantees, and eventually a full-scale takeover. Executives knew they could gamble recklessly because the crown would foot the bill. And in 1858, after centuries of conquest, corruption, and profit-first policies, the East India Company ceased to exist. If the world's richest company, commanding armies and nations, could collapse under the weight of its own profit obsessions, then what does that say about today's giants? Tech monopolies, global banks, trillion-dollar corporations. Are they building empires or quietly planting the seeds of their own destruction? Built by profits, burned by profits. That's the paradox of the East India Company. Its greed created an empire, but also the cracks that destroyed it. And that pattern hasn't gone anywhere. We don't have private armies marching under company flags, but we do have corporations with monopolistic control over data, money, and even politics. Think about it. The 2008 financial crash? Profits privatized, losses socialized. It's the same playbook the East India Company ran 2 centuries earlier. Extract wealth, destabilize the system, and then let the state clean up the mess. Or look at big tech. These firms sit on mountains of cash, shape global communication, and tilt markets in their favor. But just like the company, their pursuit of infinite growth creates fragility. Every empire that grows too big eventually becomes its own biggest threat, a feedback loop of greed and instability. History whispers the same lesson again and again. So the question isn't if today's giants will face the same fate. The question is, who is next?